Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull-bear point and figure market breadth summary chart for March 31st, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.15 rose from 1.09 last week. The total count of securities in bullish or bearish patterns decreased fractionally to 2,959. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns increased 1%. The Pirls P&F market breadth summary chart shows us a market now 12 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data, from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 82 points for the fourth decline in 12 weeks. At a positive 315.44 points, it has fallen below the January 2018 top and continues below the February 2017 top, as well as continuing below the June 2018 top, the February 2019 top, and the October 2017 top. It also continues above the remaining three tops above plus 100 in the last 30 months, and above all five bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. The CCI 20 daily, in a Woody's uptrend, is now at a positive 73.16, down from positive 80.58 last week. At Tuesday 3/26 close, it formed a zero-line reject long entry signal within the plus or minus 50 range, and did not drop below the zero-line reject pivot point for the remainder of the week. We will continue to follow this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 2 weeks ago, while the daily CCI 20 began a Woody's uptrend 10 weeks ago. The CCI 20 weekly, also in a Woody's uptrend, at a positive 116.48, down from a positive 132.31 last week. With 8 weeks above zero, it continues in a Woody's uptrend and continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: S&P Retail, REITs, and Gold and Silver on the top. KBW Bank, Brokers, Oil and Oil Services on the bottom. Bullish, S&P Retail continues in the top 5. REITs has re-entered the top 5. Oil has entered the bottom 5. Oil Services has left the top 5 and entered the bottom 5. Bearish, KBW Bank and Brokers continue in the bottom 5. Comptech has left the top 5. Gold and silver has re-entered the top 5. Focus this week from www.zerohedge.com, submitted by Eric Peters, CIO of One River Asset Management. Hedge Fund CIO. America's yield curve inversion can mean one of 3 things. The following are some key points and charts, plus an anecdote. Quote, America's yield curve inversion can mean one of 3 things, end quote, said the CIO. Quote, we're either living in a world of secular stagnation and investors worry that central banks no longer have sufficient policy tools to spur growth and inflation, end quote. He continued, quote, or the economy is simply sliding toward recession, and the inversion will persist until the Fed panics and spurs a recovery, end quote, he said. Quote, or we're living in a world where the market is moving in ways that defy historical norms because of global QE. And if that's the case, the curve is sending a false signal, end quote. Quote, if we're sliding toward recession, then it seems odd that credit markers are holding up so well, end quote, continued the same CIO. Quote, so keep an eye on those, he said, and if the curve is sending a false signal due to German and Japanese government bonds yielding less than 0 out to 10 years, then the recent Fed pivot and these low bond rates in America may very well spur a blow-off rally in stocks, like in 1999, end quote. A dovish Fed in 1998, post-LTCM, and 1999, pre-Y2K, provided the liquidity without which that parabolic rally could never have happened. Quote, but investors believe America is succumbing to the secular stagnation that has gripped Japan and Europe, and if they're growing scared that global central banks are no longer capable of rescuing markets, then we have a real problem, end quote, said the CIO. Quote, because a recession is bad for markets, but not catastrophic, provided that central banks can step in to spur recovery. But with global rates already so low, if investors lose faith in the ability of central banks to do what they have always done, then we're vulnerable to a stock market crash, end quotes. Anecdote, quote, only optimists start companies, end quote, I answered. The Australian superannuation CEO had asked if I'm an optimist or pessimist. Quote, I see the potential for technological advances to produce abundance in ways difficult to fathom, but I also see the chance of something profoundly dark, end quote, I continued. He observed that people seemed consumed by the latter, but spend so little time on the former. Quote, that's good. Humans are wonderful at solving problems of our own creation. The more we worry, the less goes wrong, end quote, I said. So he asked what worries me most. Quote, not the displacement of human labor by machines. We can solve the resulting social challenges. I worry that the only thing Americans seem to agree on now is that China is our adversary, end quote. And pressing, he asked me to list the things I admire about China. Quote, okay, I admire China's work ethic, drive, ambition, economic accomplishments. They've overtaken us in many advanced scientific fields. I admire that very much, end quote. He smiled and asked me to carry on. Quote, I'm grateful for their competition. It makes us better. And I admire that they've evolved communism to make it work while all others failed. The world is better with diversity of thought, philosophy. Diversity increases resiliency, robustness. And democratic free market capitalism will grow stronger with a formidable competitor." End quote. He smiled. Quote, "But China's system values the collective over the individual. We value the opposite, and I'm concerned the two systems cannot peacefully coexist now that we're the world's two largest economies. I don't want to live under their system. I don't want their vision of the future for my children. They probably feel the same way. Both views are valid but incompatible and increasingly in conflict." End quote. I explained. He nodded and said, quote, "I don't want that for our children either." End quote. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.